Fintech for the rest of us part in Welcome to the World of Fintech. 1. What is Fintech really? Chapter 1. What is Fintech really? Let's rewind to a regular Tuesday afternoon in Nairobi. Fatima, a 34-year-old food vendor, had just finished prepping mandazi for her roadside stall when she received a payment on her phone. It wasn't cash and no card had been swiped. A regular customer had scanned her QR code using M-Pesa, a mobile money platform so ingrained in Kenyan life that even boda drivers take it. Fatima grinned. No coins to count, no risk of theft, no bank in sight. And yet, she had just used financial technology. That's Fintech. Now let's jump to a sleepy suburb in Manchester. Peter, recently retired and mildly allergic to anything invented after 1987, decided to try one of those investment apps the kids keep banging on about. With 3 taps and a little guidance from a virtual assistant named Ava, Peter set up a robo-advisor account that invested £500 into a diversified fund that morning. He checked his toaster for signs of sentience. Still just a toaster. But Peter? He was now using Fintech too. So what is Fintech really? Let's cut through the hype, the crypto noise, the billionaire buzzwords, and the jargon that makes most of us want to bury our phones in the garden. Fintech is financial technology. That's it. But don't mistake simplicity for smallness. That single word, Fintech, represents one of the most profound shifts in how we save, spend, borrow, invest, and even think about money. It's banking without the bank branch, payments without paper, lending without loan officers, investing without needing a stockbroker, saving with apps instead of envelopes, running a small business on your phone. Whether you're using Apple Pay at Tesco, checking your balance on a neobank like Monzo, or rounding up your change into a savings app that grows your emergency fund in the background. If you've touched money with a screen lately, you've used Fintech. Still unsure? If you've ever sent money to a friend via a mobile app, paid your rent online, bought crypto, even just to impress someone, tracked your spending with an app, used Klarna or Afterpay to split a purchase, congratulations. You're already part of the Fintech revolution. You just didn't get the welcome party. Fintech isn't just an industry, it's a mindset. What makes Fintech different isn't just software, it's how it thinks about money. Old finance says, wait in line, bring paperwork, get approved. Fintech says, tap here, instant result, let's go. The old model gave you a bank manager in a tie. The new one gives you a chatbot in your pocket, and weirdly, it might be better at budgeting. Fintech uses code to solve age-old financial problems. How do I avoid hidden fees? How do I grow my savings faster? How do I pay someone across the world instantly? How do I access money when banks exclude me? Sometimes it solves problems we didn't even know we had, until someone built an app for it. So, is this just a buzzword? Let's address the cynic in the room. Yes, Fintech has its fair share of hype. Every year, some tech founder claims to be disrupting finance by adding emojis to a banking app. Some platforms overpromise and underdeliver. Others collapse in scandal. But strip away the fluff and here's the truth. Fintech is the new financial plumbing of our world. It's quietly replacing the old pipes while we keep using the taps. Real talk, who is Fintech really for? At first glance, it can seem like Fintech is made for startup bros in hoodies, crypto evangelists with YouTube channels, rich kids trading stocks between TikToks. But here's the reality. Fintech belongs to the rest of us. It's being shaped by street vendors in Nigeria, single moms in Brooklyn, migrant workers sending money home from Dubai, retirees trying to protect their pensions, teenagers learning to budget with gamified apps. Fintech is local and global. It's powerful and personal. You don't need a finance degree or a blockchain glossary. You just need a phone and a bit of curiosity. What you can do today. 1. Check your Fintech footprint. Take a quick inventory. How do you pay, save, borrow, invest, and manage your money digitally? Write it down. 2. Ask yourself, do I trust my current tools? Do your current financial apps or institutions feel clear, helpful, and empowering? Or do they confuse you? 3. Choose one Fintech area to explore. Not sure where to start? Pick one. Saving apps, mobile wallets, beginner investing platforms, credit score tracking. Just one. Let's keep it light. Fintech Mythbusters myth. I'm too old for this tech stuff. Truth. Most Fintech apps are designed for ease, not age. You don't need to be tech savvy, just open to learning. Myth. It's not safe unless it's a bank. Truth. Many Fintech companies are regulated and insured. Some are even safer than traditional banks, with faster fraud detection. Myth. I need a lot of money to use Fintech. Truth. Many apps let you start with pennies or just track habits. The revolution is micro, not mega. Final thought: fintech isn't coming. It's here. Quietly, swiftly, and often invisibly reshaping your financial life. You don't need to code it. You don't need to invest in it. But you do need to understand it, because it's already touching your wallet. And in the chapters to come, we'll break it all down, one swipe, scan, and smart step at a time. You're not behind. You're exactly where you need to be. Let's start where it matters most: your money, your choices, your future. Chapter 2. The money timeline from gold to mobile wallets. How we got here. Let's begin 5,000 years ago, with a cow. That's right, before money there was livestock. If you wanted a sack of grain, you might trade a goat. If you needed a wife, awkward but true, a few camels might do the trick. The logic was simple. Value was physical, visible, and alive. But it had one massive flaw. Try splitting a cow to pay for half a barrel of wine. So humans did what humans always do. They invented a system. And over the next few millennia, money evolved, from metal to paper to plastic to pixels. The cow problem. The first known economies were based on barter, goods for goods. But bartering was clunky. What if the person selling bread didn't want your onions? This led to early societies adopting commodity money, items that had universal value. Salt, beads, shells, and eventually metal. The Lydians, modern-day Turkey, get the credit for minting the first official coins around 600 BCE. Imagine the thrill of a weight-verified hunk of silver you didn't have to sniff to prove its worth. Coins solved many problems. They were portable, durable, and widely accepted. But then came the merchants and their sore backs. The paper revolution, carrying sacks of coins across empires, wasn't ideal. China, in the 7th century, got fed up and invented paper money. Instead of lugging around heavy metals, merchants carried notes backed by gold in government treasuries. Europe took another 500 years to catch on, but once banks in Italy and England began issuing promissory notes, the idea spread fast. Eventually, governments stepped in and declared their paper legal tender, usable for taxes and debts. Still, even paper had limits. It could be forged, soaked, or burned. Enter the 20th century. Plastic fantastic, the credit card era. In 1950, an awkward dinner in New York birthed a revolution. Frank McNamara forgot his wallet while out to eat. Embarrassed, he vowed never to be caught cashless again. Months later, the Diners Club card was born, a cardboard charge card accepted by 27 restaurants. Fast forward a few decades, and credit and debit cards became the global standard. Convenience soared. Your bank account now lived in your wallet, but it still had friction. Cards could be stolen, swiped the wrong way, or declined at the register. So technology did what it does best. It shrank things and sped them up. Money meets the internet. In the 1990s, the world went online. And so did finance. Early online banking portals let you check balances from your clunky desktop. Then came PayPal, which made transferring money as easy as sending an email. Suddenly, distance didn't matter. You could pay someone across the globe without setting foot in a bank or licking a stamp. But that was just the beginning. The smartphone changes everything. The launch of the iPhone in 2007 didn't just change phones, it changed money. The device in your pocket now had a secure touchscreen, GPS tracking, high-speed connectivity, and most importantly, apps. Fintech leapt forward. Apple Pay, Google Pay, and Samsung Pay let us tap and go. Apps like Venmo, Cash App, and Zelle made sending money social and instant. In countries like Kenya, where many people didn't have bank accounts, M-Pesa allowed millions to store, send, and receive money with just a basic phone. Mobile money became more accessible than bank accounts. It still is. From crypto to QR codes, now fast forward to today. You can buy stocks while waiting for your latte. You can pay rent in Bitcoin in some cities. Your credit card lives inside your phone, which lives inside your jeans. As in many markets, QR codes have replaced cash registers entirely. You no longer carry money. You carry access to money. That's the essence of modern fintech. So, what's next? The pace is only accelerating. We now have biometric payments, face scans and fingerprints instead of pins. Yeah, some governments are exploring central bank digital currencies, CBDCs, to replace cash entirely. And AI is helping automate your budgeting, investing, and even loan approvals, based on behavior, not just credit scores. It's tempting to feel overwhelmed, but here's the secret. The core of money hasn't changed. It still represents trust. What's changed is how that trust is transferred, stored, and moved. The more we understand this history, the more power we have over where we go next. What you can do today. 1. Reflect on how you use money now. Do you still carry cash? Do you trust cards, apps, or both? 2. Try a digital wallet. If you haven't already, download one. Apple Pay, Google Pay, or a local fintech app, and try it once. See what changes. 3. Learn from the world. Read up on how countries like Kenya, China, and India have leapfrogged traditional banking with mobile money. It might inspire how you manage your own. Real talk myth. Fintech is just for young people. Truth. In the Philippines, grandmothers use Gcash more than teens. Myth. Cash will always be king. Truth. In Sweden, only 1% of transactions are now in cash. Myth. Money hasn't really changed that much. Truth. It's changed more in the last 15 years than in the last 500. Final thought. The history of money is a story of friction reduced and freedom increased. From bartering cows to tapping phones, we've always looked for better ways to exchange value. The tools have changed. The tech has evolved, but the goal remains the same. Make life easier. Make money safer. Make your time count. You don't have to master every chapter of this timeline, but you do need to know where we are now and where we're headed next, because understanding how money moves is how you move with it. Chapter 3. Who's driving the change? Startups, giants, and the people who try to keep them in check. On a foggy morning in San Francisco, a former Google engineer, a frustrated banker, and a pizza delivery app designer walked into a coffee shop. It sounds like the start of a joke, but what came out of that meeting eventually became a billion-dollar fintech startup. They didn't wear suits, they didn't ask permission, and they didn't follow the old rules of finance. They wrote new ones in code. Today, that story is being repeated thousands of times across the world. In Berlin, in Lagos, in Mumbai, in Sao Paulo, some of these ideas fail spectacularly. Others become household names, changing how we pay, save, borrow, or invest without ever walking into a bank. But they're not the only ones rewriting the rulebook. So who's really driving this financial revolution? It's not just the hoodie-wearing coders in basements. It's also trillion-dollar tech empires, cautious regulators, and, whether you realize it or not, you. Let's meet the key players. 1. The startups. Rebels with a business model. Startups are the heartbeat of fintech. They start with a simple idea. What if money was less complicated? Some want to make budgeting easier. Others want to lend faster, invest smarter, or move money across borders with no middlemen. Here are some common startup archetypes. The neobankers, like Chime, Monzo, and N26. No branches, just apps. The robo-investors, like Betterment and Wealthfront. No suits, just algorithms. The disruptive lenders, like Upstart and Tala, using AI to approve loans where banks said no. The payment magicians, like Stripe, Square, and Flutterwave, turning smartphones into cash registers. Most of them aren't trying to be banks. They're trying to be better than banks at something specific. But here's the twist. While their tech is shiny, their goal is very old school. Solve problems, make money, scale fast. 2. The tech giants, platforms with power. Then there's the second group. Not rebels, rulers. Tech giants didn't start with fintech, but they're circling it like lions around a gazelle. Why? Because money is the final frontier of data. These are your usual suspects. Apple, Apple Pay, Apple Card, Apple Cash. Apple might be more bank than phone company now. Google, Google Pay integrates with everything from rides to rewards. Amazon, lending to small businesses, experimenting with payments, quietly becoming a fintech empire. A Meta, Facebook, pushing into digital wallets and exploring stablecoins. In Asia, it's even more dramatic. Alibaba, Alipay, and Tencent, WeChat Pay, have become everything apps. You can shop, chat, bank, and invest without ever leaving the interface. These giants have something startups don't: scale. They already know everything about you, what you search, buy, stream, and scroll. Fintech just completes the picture. That's both powerful and terrifying. 3. The regulators. Brakes, borders, and balance. Now let's talk about the people tasked with keeping this digital gold rush from crashing into a wall. Regulators aren't the villains of fintech, but they are often the last to arrive at the party. Why? Because technology moves at lightning speed and laws move like a glacier on vacation. But without them, your money might vanish in a scam or get stuck in a cyber black hole. Here's what regulators do. Set the rules. Who can offer loans, handle payments, or hold customer funds? Protect consumers from fraud, abuse, or hidden fees. Stabilize economies, ensuring that innovation doesn't lead to collapse. In the US, you've got agencies like the SEC, the FDIC, and the CFPB. In the UK, it's the FCA. In Nigeria, the CBN plays watchdog. The EU has a patchwork of evolving rules. Globally, regulatory sandboxes have emerged, safe zones where startups can test new products under supervision. It's like learner plates for fintech. But regulators face a paradox. Too little oversight and chaos, too much, and innovation suffocates. Striking that balance? Easier said than coded. 4. The fourth driver. Let's not forget the most important player in this story. You. Yes, you. The person reading this on the bus, in bed, or at work. No judgment. Every time you choose to pay with your phone, open a savings account with a digital bank, use a budgeting app instead of a spreadsheet, buy a cryptocurrency just to see what the fuss is about, you're voting for a new financial system. The more people opt in, the faster the change. Fintech doesn't grow in a lab. It grows in your hands. That's what scares legacy institutions and excites entrepreneurs. You are no longer just a consumer. You are the accelerator. What you can do today. 1. Explore your favorite app's parent company. Is it a scrappy startup or a trillion-dollar tech firm? Understanding who's behind the product helps you judge trust and motive. 2. Look for transparency. Does your fintech app explain its fees? Is it regulated in your country? A little research can save you big headaches. 3. Support local fintech innovators. Many developing countries have leapfrogged traditional banking. Try a homegrown platform that solves real-world issues in your community. Fintech Mythbusters myth. Only banks can handle my money. Truth. Many licensed fintechs offer the same protections and better features. Myth. Tech giants just want to help. Truth. They want to own the rails your money moves on. Convenience often comes at the cost of control. Myth. Regulators always know what they're doing. Truth. Many are still catching up with crypto, AI, and digital identity. Final thought, fintech isn't a solo act. It's a chaotic, high-stakes ensemble cast. Startups sprinting ahead, tech giants playing chess, regulators trying to catch their breath, and ordinary people, like you, driving change without even realizing it. In the old system, you were a passive customer. In this one, you're the catalyst. You're the reason fintech is exploding, expanding, and evolving. The question is, how will you shape it next?